It just happened. Alphabet, the parent company of Google, finally announces a dividend. Today, we're getting under the hood of Alphabet's phenomenal first quarter earnings report. This wasn't just a good quarter, it was a record breaker, and we're going to explore exactly why. First things first, let's talk about the headline number, revenue. Alphabet absolutely smashed it, generating a whopping 80.54 billion in Q1. That's a 15% year-over-year increase, and it beat analysts' expectations by a significant margin. This impressive growth wasn't driven by just one segment. It was a true team effort. Search, something that has become synonymous with Google, kept its winning streak alive with a solid 14.4% year-on-year revenue jump. This growth demonstrates the continued relevance of Google Search as the go-to platform for billions of users worldwide who want to find basically anything on the internet. Now, some of you might remember there were some concerns about YouTube's advertising performance. Well, those concerns can be put to rest. YouTube silenced the naysayers with a robust 21% year-on-year increase in ad revenue. This is a significant jump and shows that YouTube is a powerful advertising platform in its own right. I mean, at the end of the day, you're actually on it watching a video right now, so it kind of proves the point. In the subscriptions, platforms, and devices segment, including services like YouTube Premium, Google Play Store purchases, and others, revenue surged an impressive 18% year-on-year. This suggests a growing user base engaging with YouTube beyond just ad-supported content. YouTube Premium subscribers surpassed 100 million subscribers globally. With all of that said, let's not forget about Alphabet's rising star, Google Cloud. This segment continues its impressive ascent with a 28% year-on-year revenue increase. Considering the fierce competition in the cloud space with giants like Amazon Web Services and Microsoft Azure, this growth is particularly noteworthy. It seems Google Cloud is carving out a strong position for itself, attracting new customers and businesses. Alright, it's all nice and fancy to talk about revenues, but what do we as investors mainly care about? Profits. This robust revenue growth translated directly to the bottom line as well. Operating margin, a key profitability metric, expanded to a healthy 32%, which is a significant improvement from 25% a year ago. This shows that Alphabet is not just growing revenue, but it is also managing its costs efficiently. Earnings per share, or EPS, also exceeded expectations, coming in at a strong $1.89, well above the anticipated by the analyst's number. Now, to the part that really excites investors, especially dividend ones. Alphabet announced its first ever quarterly dividend of 20 cents per share. This marks a significant shift in the company's strategy and signals its confidence in its long-term cash flow generation. I mean, I can't deny that they probably did that because Meta forced their hand earlier this year, also announcing a dividend for the first time. Regardless, all we care about is that it's a clear message to investors that Alphabet is committed to rewarding them not only with buybacks, but with cash deposits in their brokerage accounts as well. Speaking of buybacks, the board also announced a staggering 70 billion share repurchase program. This means Alphabet will use its cash to buy back its own stock, ultimately increasing the value of remaining shares held by investors. This is always a sign of a strong commitment to shareholder value and reflects the company's financial strength. Leading financial analysts are overwhelmingly bullish on Alphabet's future. They see significant upside potential, citing the company's diverse business segments that are working together in a complementary way. Here is what's particularly exciting. Search, cloud, and AI are working together in a powerful way. CEO Sundar Pichai has referred to this period as Alphabet's Gemini era, emphasizing the company's focus on AI development and its potential to unlock new opportunities across all segments. For those of you who don't know, Gemini is Google's AI-powered chatbot. So, let's translate this impressive financial performance into something actionable for you, the investor. Alphabet's stellar performance and commitment to shareholder value are clear signs of a healthy and growing company. The first ever dividend and sizable buyback program provide great benefits for those holding Alphabet stock. So, here is a breakdown of my key takeaways from this latest report. First, increased cash flow. The dividend signifies Alphabet's confidence in its ability to generate consistent cash flow, offering investors a reliable return on their investment. Usually, companies never take back announced dividends unless their business is totally falling apart because they know investors hate it. So once a dividend is announced, it means it should either grow or at least stay the same for the foreseeable future. This is why I love stable, profitable, dividend-paying companies. And if you want to learn more about my strategy for investing, you can sign up for for my free investing masterclass by clicking the link in the description. Second, enhance shareholder value. The buyback program reduces the number of shares, potentially driving up the price per share for remaining investors, because when the number of shares is reduced, the shares you hold become more valuable. Third, long-term growth potential. The strong performance across segments, coupled with the focus on AI, what they call actually the Gemini era, suggests Alphabet is well positioned for continued growth and innovation in the coming years. So while the future is never guaranteed, of course, Alphabet appears to be in a fantastic position. The company is not reliant on any single segment for success. Its diverse portfolio provides stability in case one of the segments underperforms. Also, the company shows impressive revenue growth, expanding margins, and a commitment to responsible cost management, which should drive a lot of value for investors. And last, Alphabet's dedication to AI development through the Gemini era could unlock significant future potential across all segments. How will that play out? No one knows yet. We're in the midst of a revolution as big, if not bigger, than the industrial one, and it seems like Alphabet will continue to be at the center of it. So let me know in the comments, what do you think about Alphabet's first ever dividend announcement? After you do that, you can check this video that should have appeared on your screen already to continue with your investing education. I'll see you there.